why you can be a lazy saver and still retire rich as a TSP millionaire. Number one, the C fund for a low fee allows you to invest in index funds that owns Google, Apple, Microsoft, and Amazon. Investing in those companies over the long haul can return a lot of interest to you and your TSP account, right? And so if you're somebody that wants to retire with a lot of lifestyle, all you gotta do, put your money in the C fund, let it grow, and you'll be surprised by the results. Number two, the TSP has very low fees, which means more money for you. And I find people all the time to say, Mr. Smith, I got some of my money in this other account that somebody else is managing for me, right? In order for that to happen and the person be good, you're gonna be paying 1-2% for that, right? Within the TSP, you're paying less than half of that for your funds to be managed by a professional investor, which is the TSP, right? And so with the TSP, the fees are lower and you get solid returns, which means more money in your pocket. Number three, there are life cycle funds that allow you to target every 5 years, which means you can be very specific on your retirement target. Now, what does this mean, right? Within the TSP, you have the life cycle 2025, 2030, 2035, and so on, all the way out to 2060, right? What this is these are target dates for your retirement. The TSP will invest the money specifically to the range in which you're going to retire. So example wise, if you're retiring in the next 5 years, they'll balance the account to be more conservative because you don't have much time, right? Now, if you have 20 years left, you could be 2060, 2050, whatever, right? It's going to be more aggressive because you have more time, which means you can weather more ups and downs in the market than someone who's getting ready to retire in the next couple of years, and they'll be in the 2025, 2030, right? Number four, the TSP has what's called the Roth option, the TSP Roth. This is fairly new. It came online about 10 years ago, right? And what this allows you to do is allows you to invest in your TSP and pay the taxes now so you don't have to pay the taxes in retirement, right? There's a saying that goes, would you rather tax the seed or the harvest, right? The good thing is you have the option to invest up to the full amount of your retirement allotted for the year within your Roth, right? The only thing with the TSP is the matching portion, you don't have that option to put that into the Roth. That's going to go traditional, but the remaining, you can have all that money in Roth. Outside of the TSP, you're not allowed to do that. You're constrained by the IRS maximums that is tied to your income, and there's a lot less money that you're able to put into a Roth account. Number five, you can take loans at the interest rate of the G fund, which is much lower than the credit card interest rates or loans at the bank, right? So this is what this means, right? If you were to take a loan out against your TSP to say pay off a high interest rate credit card or something you were going to borrow money for anyways, you can borrow the TSP at the current rate of the G fund. In most cases, that's between 1% and 3%, which is much lower than what you're going to get if you were to go to your credit cards or like a loan at the bank, right? And so your TSP allows for that. Now, you don't want to make a habit of that, but it's an option if you were in an emergency, right? You just pay it back. Those are the things that if you do, you can be lazy and still retire well if you just do those things. So if you want more tips like this, all you have to do is subscribe below. Here's what I want you to do. I want you to click the link below, book a call with our team. And what we'll do is we'll take you through our TSP finish line process and help build out a financial plan for you so you can retire on time and with confidence.